George Soros funds enter cryptocurrency in 2021. Massive manipulation incoming for Bitcoin. Hello, lovely YouTube family. Welcome back to Silly Crypto. In today's videos, we are going to talk about George Soros fund enters cryptocurrency in 2021. Massive manipulation incoming for Bitcoin. Before we start, I would want you to hit that red subscribe button so that you never miss out on any of our videos. Over the last 6 months, Bitcoin has soared nearly 500% in a bull market that has turned the cryptocurrency into a $1 trillion asset. The Bitcoin price has risen to around $60,000 per Bitcoin, nearing all-time highs as Wall Street titans and companies such as Elon Musk's electric car company Tesla make large bets on Bitcoin. Now, as the broader cryptocurrency market approaches $2 trillion, the chief investment officer of Soros Fund Management claims Bitcoin has reached an inflection point due to the George Soros Fund asset manager's crypto infrastructure bets. A report on TheStreet.com cited two sources who said Soros Fund Management's chief investment officer Don Fitzpatrick had given the internal green light to actively trade Bitcoin, sparking speculation that the storied investors firm has entered the cryptocurrency market. According to the report, the company is also looking into other digital currencies. In a March interview with Bloomberg, Fitzpatrick said the company invested in cryptocurrency infrastructure firms such as exchanges, asset managers, and custodians. She said it was a significant moment in time for cryptos, and Bitcoin could have remained a fringe asset if the money supply had not increased by more than 25% in the previous year. So there's a real fear of debasement of fiat currencies, and when you think about Bitcoin, I don't think it's a currency, I think it's a commodity. And it's a commodity that's easily storable, easily transferable. The IRS classifies it as a physical asset. It has a finite amount of supply, and that supply is halved every 4 years. So I think it's interesting, said Fletcher. We think the whole infrastructure around crypto is really interesting, and we've been making some investments into that infrastructure, and we think that is at an inflection point, Don Fitzpatrick of Soros Fund Management told Bloomberg, pointing to the growth of Bitcoin and crypto exchanges, asset managers, and custodians. Soros Fund Management, a leading technology and financial services firm dedicated to Bitcoin, invested in Lucca, a crypto data provider, and NYDIG, a Bitcoin financial services company, in March. On Thursday, the world's most popular cryptocurrency was trading at $33,523, down 3%. Following a solid start for the year that saw Bitcoin and Ethereum reach all-time highs of around $65,000 in April. The just completed second quarter was set to be the worst on record for Bitcoin and Ethereum, owing in part to a crackdown in China. In April 2018, Soros Fund Management received approval to trade digital assets, according to Bloomberg, which cited sources in January of that year. Soros himself told the World Economic Forum that Bitcoin and other digital coins could not function as a currency because of their volatility. That year, Bitcoin began trading at $13,535 and ended at $3,721. One analyst said it was changing to interpret what any new move by Soros firm might mean. Chris Weston, head of research at Melbourne-based broker Pepperstone, said, "Any big hitters in the mix is initially considered great for the adoption story, especially if it is a vehicle to reduce portfolio variance through the low correlation effect. In terms of crypto in general, I believe we've arrived at a critical juncture. Things like Bitcoin might have remained a fringe asset if we hadn't increased money supply in the United States by 25%, Fitzpatrick said, adding, "There's a real fear of fiat currency based on Bitcoin. Bitcoin's massive rally, which has seen it rise from under $10,000 per Bitcoin this time last year to around $60,000 today, comes amid unprecedented central bank money printing and government stimulus measures implemented to offset the economic damage caused by the corona pandemic. These measures sparked fears that a wave of inflation was about to hit the US dollar and other currencies, with well-known investor Paul Tudor Jones igniting the Bitcoin market last year when he declared Bitcoin to be the fastest horse to beat inflation. When you look at gold price action, it's struggled to get traction in the context of a fairly robust inflation narrative of late, and I think that's because Bitcoin is taking some of its buyer base away," Fitzpatrick said, declining to say whether she owns any Bitcoin. Fitzpatrick did warn, however, that Bitcoin-inspired central bank digital currencies in development around the world could pose a potential threat to Bitcoin and other cryptocurrencies' adoption in the long run. Still, she remains optimistic in the long run. I believe it is a real threat, but only for a short time. They won't be able to permanently destabilize Bitcoin in my opinion, Fitzpatrick continued. According to Weston, the report simply stated that the firm has been cleared to trade this. So without knowing much about what they plan to do, they could be lumping into short positions in futures. If they believe liquidity beneficiaries will suffer as the Fed's balance sheet grows at a much slower pace and the front end of the yield curve lifts, maybe being short crypto isn't such a bad play. TheStreet.com also reported, citing sources, that hedge fund Point72 Asset Management was looking for a head of crypto. This publication attempted to contact both Soros Fund Management and Point72. So what is the big deal here? First, there's Soros' shady reputation when it comes to currencies. Great news, Soros has entered our currency market, someone tweeted. But let us not forget that in 1992, Soros was the most prominent of a group of currency speculators who literally broke the British pound, forcing the country to withdraw from the European exchange rate mechanism, which was a precursor to the Euro's agreement. Could Soros try to wield that power once more, but this time in the crypto markets? More broadly, there is the question of what these companies' interest is. These are primarily concerned with making money, not adhering to a particular market thesis or world philosophy. The report merely said the firm had cleared to trade this, said Chris Wesson, a market researcher quoted in Barron's. As a result, they may be lumping into short positions and futures without knowing much about what they plan to do. If they believe that liquidity beneficiaries will suffer as the Fed's balance sheet grows at a slower pace and the front end of the yield curves rise, shorting crypto might not be such a bad idea. Remember that the hedge funds that came in last year did so in response to a specific market thesis. The one that was set by Paul Tudor Jones, great monetary inflation, and these are themes that Stan Druckenmiller has echoed. As mentioned earlier, Don Fitzpatrick, Soros' CIO, alluded to some of this kind of thinking when she explained why the firm was interested in this market. However, if we recall what Point72 said, they should not overlook a $2 trillion asset class. This is not the same as being convinced that it is a valuable asset class. If you think these people entering are all good news, think again. They only care about short-term profits and losses, which excludes the 5-year horizon. They are traders, so they will accumulate and then dump after shorting the future. And they will use funds to manipulate the market. So do we believe we should be concerned about it? For 2 reasons, we do not think so. For starters, it is unavoidable. The larger this space becomes, the more traders will enter who do not have any long-term conviction in the asset, but see opportunity in the chart in one way or another. This could be detrimental in price suppression, but it is ultimately a part of Bitcoin's maturation. What matters far more is that the number of solid hands continues to grow, and this is the group that sets natural price floors and keeps tradable supply constrained by every metric. So long as that group continues to grow, and conviction will be fine. When it comes to direction, it is nearly impossible for us to imagine a scenario in which Bitcoin and the entire asset class that surrounds it does not continue to rise in value. There is simply too much construction and too much money that is yet to be allocated for that not to be the case. That is, in terms of direction over time. Net long is the only position that makes sense. That is not a piece of financial advice. That is all for today. I hope you liked the video. If you did, make sure to hit that like button and subscribe to the channel so that you never miss any amazing videos from us.